Hello, friends. Today we are going to learn about the best indicators to use in Forex trading. Forex trading indicators are essential tools that help traders analyze the market, predict price movements, and make informed decisions. These indicators provide insights into trends, momentum, volatility, and key price levels, enabling traders to identify potential entry and exit points. Trend indicators are particularly valuable for determining the overall market direction. Moving averages, MA, for instance, smooth out price data to highlight long-term trends, while the moving average convergence divergence, MACD, combines moving averages to show changes in momentum and identify trend reversals. Bollinger Bands, which plot price levels above and below a moving average, reveal periods of high or low volatility and help traders identify overbought or oversold conditions. Momentum indicators, such as the Relative Strength Index, RSI, and the stochastic oscillator, focus on the speed of price movements and help traders assess whether a currency pair is overbought or oversold. These tools are instrumental in predicting potential reversals and timing trades effectively. Other momentum tools, like the rate of change, ROC, and the Commodity Channel Index, CCI, measure the strength and speed of price trends, giving traders a clearer picture of market dynamics. Volatility indicators measure the degree of price fluctuations and are critical for managing risk. The average true range, ATR, is widely used to gauge market volatility and set appropriate stop-loss levels. Keltner channels, which are based on ATR, provide dynamic support and resistance levels, helping traders understand price behavior within a range. Volume-based indicators, such as on-balance volume, OBV, and Chaikin money flow, CMF, offer insights into the strength of buying and selling pressure, confirming trends or highlighting potential reversals. Support and resistance levels play a key role in Forex trading, and indicators like pivot points and Fibonacci retracement help identify critical price levels where the market may reverse or consolidate. These tools allow traders to plan their trades around key zones of market activity. Composite indicators, such as the parabolic SAR and Williams %R, combine various elements of market analysis to signal potential trend reversals and overbought, oversold conditions, simplifying the decision-making process for traders. By integrating these indicators into their strategies, traders gain a comprehensive understanding of market conditions, improve risk management, and enhance their ability to make profitable decisions. A careful selection of indicators, tailored to the trader's style and objectives, is essential for achieving success in the dynamic and fast-paced Forex market. Make sure you like this video and subscribe the channel before you go. Thanks for watching.